If you run a home care agency and you've ever felt unsure about how your taxes actually work, you're not alone. I work with business owners who are doing well in their businesses but still feel unclear when it comes to taxes. And most of the time, it's not because taxes are complicated. It's because no one has ever explained things clearly. So in this video, I'm going to break down the three main types of taxes home care agencies deal with so you can understand them in plain English. Running a home care agency is already a complex job. You're coordinating caregivers, managing schedules, communicating with families, handling payroll, while making sure your clients receive quality care. So it's completely normal if the tax side of the business feels confusing. Most agency owners don't struggle with taxes because they're doing something wrong. They struggle because no one has clearly explained how the system works. The good news is, once you understand a few key pieces, business taxes become much easier to manage. When it comes to taxes, home care agencies usually deal with three main categories. The first category is taxes based on your business profit. Profit simply means the money your business earns after subtracting your business expenses. For many home care agencies, those expenses include caregiver wages, payroll taxes, insurance, recruiting and training, mileage reimbursements, administrative, and software costs. After those expenses are accounted for, what remains is your profit. And that profit is generally what income taxes are based on. How that tax is paid depends on your business structure. Some owners report profit on their personal tax return. Others receive income through ownership shares depending on the type of entity they operate. We won't go deep into business structures today, but we will cover that in a future video. The second category is payroll-related taxes. This applies if your home care agency has employees, which is very common in this industry because agencies typically employ administrative staff and caregivers. Now, here's something important to understand. When you pay your employees, you are responsible for withholding certain taxes from their paychecks. For example, federal income tax, social security taxes, and Medicare taxes. And as the business owner, you're also required to pay your portion of social security and Medicare taxes. And all of these taxes, the amounts you withhold and your portion must be sent to the IRS. That means this isn't just about paying your employees. You're also responsible for handling and submitting taxes on their behalf. For many home care agencies, this becomes one of the largest and most important tax responsibility, simply because there are many employees involved. The third category includes employer-related taxes, such as unemployment taxes. These taxes help fund unemployment benefits for workers. They include federal unemployment taxes and state unemployment taxes. In industries like home care, where staffing levels can be significant, these taxes are an important part of your overall labor costs. When people first hear about all these different taxes, it can feel overwhelming. But in reality, most home care agency taxes come down to three things: taxes based on your profit, taxes related to paying employees, and certain state or local taxes depending on where you operate. Once you understand those categories, the system becomes much easier to navigate. The key is having clear financial records so you know exactly what your numbers are and making sure the taxes you're responsible for are handled correctly throughout the year. Now that you understand the main types of taxes home care agency owners typically deal with, the next question many people ask is, what expenses actually reduces the taxes you owe? In the next video, I'll walk through several common tax write-offs home care agency owners often miss. I'll see you there.